Okay guys, Saturday the 4th of November and we are on the S&P 500. No idea how we've got into November already. This year seems to have flown past. So what we're going to do is we're going to have a look at this market in relation to last week's Sunday analysis, and then we'll have a look at the market for the trading week ahead, and then we'll move on to the NASDAQ and do the exact same thing. Okay, so for the S&P 500, last week we were looking at a couple of different things. So we had our trend line on this market, the upper trend line, that we identified using previous swings on the S&P 500. Had a few touches, and then if we start to come back, see the market just resting on it here as it is breaking as we come down. We're using it as support, we then come back up, we're using it as resistance, as support, and as resistance. Now, it was just sitting above where we tested on Friday the 20th and Monday the 23rd. And what we went over last week was how this was still key resistance. And what we could do was add in the levels, let's just mark this in properly, that we had been given from the previous week, which were identifying that possible level of resistance. So you can see the market testing it here. And then coming up into Friday, we press right up into that level. And we looked at this area as potential resistance. That's exactly what we've seen for pretty much all of next week. We're coming up, we're testing at the level. When we spike through on the first, what do we come up to do? Basically come up to test at this sloping support and resistance area. And then on Friday, we've had a doji candle. And in all honesty, if we drop down onto the 5-minute time frame, you'll likely see a very choppy day due to non-farm payroll. So coming into next week, what are we looking at? Well, really, we're still looking at these key levels. This one here up into sort of 2585 down to around about 2575. This remains a key level of support and resistance. We also have that sloping trend line, which is acting at present as resistance just up above. Worthwhile keeping your eye on. You can actually see the market has already spiked up and tested it right here. If we spike up again next week, worthwhile taking into account the high of Wednesday, which is lining up pretty much with the high of the 3rd of November, lining it up with the sloping resistance line and looking at it as another potential level of resistance. Now, if we start to break up above this sloping resistance line, which has been used for quite some time, if we come back, we're all the way back into September of 2016. And then even as we start to come back further, you can still see the market is testing at this level. So it's been respected for a long time. If we break up above, it's also worthwhile watching for the pullback on those lower time frames, because really then I'd be looking at the move up into at least 2,600. It would make sense. What we might actually see is if we just continue to resist at this sloping trend line, is we might just bounce up along it going into the next couple of weeks and test 2,600 that way. But if we do start to break up above, it's worthwhile looking for the pullback potentially into the highs from Wednesday and Friday of last week, which would line up with that level, and then we'd look for the bounce into 2,600. Now also, if we start to press up and test at these levels again, it's worthwhile then using this 2585 and 2575 as potential resistance for bounces back up to retest at the those previous highs. It's basically be the market breaking above resistance, coming back down to retest as support. We've been such a strong uptrend. It's always worthwhile looking for those bullish bounces on the S&P. Now we can actually just bring this down a little bit into 2570, around 2572, 2573. And all I'm doing is using this little spot from Tuesday, the 24th of October as a little bit of a clue that potentially this is the bottom of that support and resistance level. What we may see is if we start to come back down, so if we're breaking up above here, we're starting to come back down, we'll be testing at the center line of sloping support. And all we're doing is looking down, looking at the price action, looking for those potential levels. You can actually bring it down into this area right here. So we're around about 2565 down into 2557, 2555. Just make it a little bit bigger. Actually bring it down a little bit further. What I'm looking at is the spikes up on the 10th of October, the 11th, and the 12th, all lining up almost perfectly. Down into this level here. This becomes a good level of support down below. Now, if we start to break down below that level, not only are we breaking down below the sloping support line, we're also breaking down below a strong previous swing. I'd then be happy to look for the resistance and a move back down toward at least sort of 2545, using again previous swing levels right here. On the S&P, so we're about 2550 down to 2540. You can see the spikes down 19th of October and the 25th of October also, testing down toward that previous swing. This would be the bottom of the swing. Up above, this would be the top of the swing, which we're taking into account on this support and resistance level. Breaks below, more than happy to look for the move down into that level, which would again become support. And then if we break down below this level, we have been going over this for a few weeks now since we started doing these videos, we'd then really be looking for the stronger correction. You know, we still have potential sloping support lines down below, but really if we're breaking down below this trend line, after such a strong wave up like this, it's very likely the bears would step in and force this market back down toward 2500. It's only if we start to break down below these levels, except down below these levels. At present, this market is still very bullish, and we are still approaching it in that manner. Okay guys, so that is everything for the S&P. What I'm going to do now is load up the NASDAQ charts and we'll do the exact same thing for that market. Okay guys, so now we are on the NASDAQ. Now from last week, or for the last couple of weeks, we've been going over the main thing was this potential ascending triangle. And then broken up above, we were looking for the pullback to retest at resistance becoming support. And then we've had that strong move upward once again. Now on the NASDAQ, we are up at all-time highs, and especially last week with the Friday move being such a powerful wave up. And we didn't have a lot of evidence as to what to look for in terms of resistance up above. It's one of the things with markets that are at all-time highs. You just have to sort of make educated guesses, I'd almost call it. And you know, one of the ways to do that is to use key round numbers. So things like 6,300, 6,400, 6,500, those are always good areas to look for potential support and resistance. Just psychologically, a lot of people look to enter the market at those types of numbers or take profits at those types of numbers. Just human psychology. Okay, so coming into this week. Now, the first thing is, last week we had a lot of stalling up at these levels, which for us is a good thing because it's giving us a clue as to those support and resistance levels. So the main things are, well, first of all, this sloping support line from that ascending triangle. If you actually extended this further down, you would see it has been tested all the way back. We can just do that quickly. I would actually say if we just take it from here, around about here. Oops, let me just get rid of that one. Okay, so if we start to scroll back, what we can see is the market retesting all the way back down in June of 2016. I'm not sure if it's been tested further back. It hasn't. So this would be the main point where this trend line started. As we come all the way up, we then start to retest 1, 2, and 3 times, creating this ascending triangle. So if we see pullbacks now, looking into medium term to longer term, back into this level, great place to look for those bullish positions once again. And continuation. Let's get rid of these arrows. Now, as from last week, we still have this level down below. Let's just mark it in. Just taking the high points of this previous swing at present. So we've broken up. If we see the pullback to retest at this swing point, again, we can look for those bullish positions and continuation. Down below, this level remains key support. We also have another couple of levels. Let's just mark them in whilst we're here. Taking into account basically where the market pressed up and came down and tested that first time on the 19th of October. Now, the 19th of October, we came down, we tested, and this is the bulls stepping in, trying to press the market higher once again. It didn't work. You can see we had to have that full pullback into that key level of support and also testing that sloping support line before we've seen the bulls stepping back in. But we do have a slightly more minor level at around about 6,050, sitting just here, which is also worthwhile looking for potential support, especially if we're starting to make the move down and it's lining up with this sloping support and resistance line. Now up above, what we're doing is we're looking at last week's price action for some clues as to what is going on. What you can see is basically, I'm just going to do it with rectangles first of all, one here and one here. The market was in a range for most of the week. So what's it telling us? It's telling us we have a level of resistance and it's telling us we have a level of support down below. Really for the support level, you can take it all the way up into that spike up from the 27th of October and then down into the low of the 2nd of November. Now, the reason we're just pressing it up a little bit higher is we're using the Sunday price action as a little bit of a clue. You can see it's spiked up, rejected it almost at the same level, and then on the 1st, we pressed back down, we retested at both of those levels on this bearish day. Now up above resistance, it's actually a very flat level. You can see it relatively easily. If we look at the 30th, 31st, the 1st, so the open price on the 1st, and also the 2nd of November, the close and the high price, very, very similar levels right here. Right here. Now, what we are potentially seeing is the market attempting to break up above on the 3rd of November. If we see the pullbacks now into this level, again, worthwhile looking for potential support on the NASDAQ. Until we get that evidence that this strong bullish movement is ending, more than happy to look for buys on any of these pullbacks. Now, the spike up here on the 1st of November, what this is really doing is it's an early test of the round number, 7,300. So around about 285 is where it failed. And that's because, as I mentioned, round numbers, always good areas to watch for potential support and resistance. And as we press up into this level, coming into next week, I'm just taking the 1st of November and the 6,300 level. Sorry, I keep saying 7,000. It's because I mainly trade the FTSE and it's up in the 7,000 levels. So, key area of resistance, if we start to break up above, again, we just then begin to look for that evidence on the wave up. But really there's a potential for the NASDAQ to get all the way up into 6,400, 6,500. 6,500 would be more of a key level of resistance if we did see that in the medium-term future. Because, you know, it's the midpoint between the thousands. So 6,000 would be a very strong level of support and resistance. 6,500, 7,000, 7,500. And then in between, you have the round numbers also, 6,100, 6,200. Always worthwhile watching for potential support and resistance. So if we did start to break up above that 6,300 level, first of all, we don't have a lot of information up above, so we want to be a little bit careful for those false breaks. But pullbacks, again, support up into at least, you know, 6,350, and potentially that move up into 6,400. These are the main levels that I am watching on this market now moving forward. I've got those clues from last week. Support, support. If we do start to break down below this level, happy to look for potential resistance and that move down. If we break below this level, happy to look for that resistance and then really a stronger move back down to retest at this previous swing level at 6,130. Okay guys, so that is everything for this week for the US indexes. As always, I hope you found that helpful. I hope you all have a good trading week next week. I'm James Orr and thank you.